Hello everybody, how are you? Hope you're all doing well. My name is Tapus Kumar Basu. On behalf of my channel, the Technical Analysis of Financial Product. Today also I have come. Today I have made up a mind to illustrate you about the technical implication of Nifty 50. I mean, in the coming week, what would be the range of Nifty 50? I mean, what would be the support zone and what would be the resistance zones? Now, to illustrate it, now I'm straight away I'm going to the daily candlestick chart of Nifty 50. Yes, this is a daily candlestick chart of Nifty 50. You see, on the last Friday, this is the last Friday, market was closed on 17,617.15. Right. So this is a kind of a candle. It's a technically which we call the Doji Star. Doji Star is a candle which generally signifies the reversal pattern. I mean, so depending on the presence of the next candle, so it may reverse towards the upside, but if we see there is a presence of a bullish candle, I mean the very next day. So if we see there is a presence of a bullish candle next day, then there is a possibility to be retreats to our upside. But we cannot come to a conclusion based on the candlestick only. So we have to check also another parameter. You see, already here I have plotted the Elliott waves. You see, this is the Elliott waves. How I have plotted, just nothing is that you have to go to the trend line, you have to click over here, then you have to drag the line this way. So this is the way you have to draw particular this sort of line, right? So I have plotted over here Elliott waves. Elliott waves generally moves in the market 5:3 ratio, right? 5 is the first 5 ratio to be known as a impulsive ratio, and the next 3 ratio is known as a corrective ratio, right? Elliott waves generally moves in the market towards downside also, towards upside also, and whatever side is there, but it generally maintains the 5:3 ratio. Here you can see this is a complete downtrend. This is the first one. These are first ratio. I mean, these are first waves. These are called one, and these are second wave. This is third wave. Always remember the second wave should be lesser than the first wave, and the third wave should be greater than the first wave. You have seen third wave is greater than the first wave. Then there is a fourth wave. Then there is a fifth wave. Next we can see there are three small waves which are known as corrective waves. You see this is a one waves. One corrective waves to be marked as A. There is another corrective waves. The market came down a little bit. There's a B, and the market again retreats towards upside. There's another small corrective wave. There's a C. So after that we have to see whether the market go towards upside or whether the market go towards the downside. You see, from here the market has started moving towards the upside. It means the Elliott waves here, Elliott wave we've seen, the Elliott waves has functioned over here as a 5:3 ratio. It generally function like this, and the here Elliott waves also started already. I have marked here is a one. This is a first wave, this is second wave, this is third wave. As far as the Elliott waves is concerned, second wave should be lesser than the first wave. You see, second wave is lesser than the first wave, and the third wave should be greater than the first wave. Third wave is greater than the first wave. Now the fourth wave is underway way. So if we see the market is corrected to, if we see the market retreats towards the upside, that means the five wave should start. In the five wave will start. So based on the Elliott waves, we have seen that the fourth waves has already been created over here. Then there is a possibility to create another waves. So another wave should be the fifth wave, and based on the Elliott wave, the fifth wave should go towards from upside, from towards downside to upside. So if it starts the fifth waves, so definitely it will move from here towards the upside, right? So it may retreat toward the upside. So we are just wait. So as far as the Elliott waves is concerned, there is a possibility to be retreats towards the upside, correct? So then so now we have to also check another parameter, that is called, see, here is a, see, already I have plotted a Fibonacci retracement, right? Based on the Fibonacci retracement, you see the market is right now trading above the 50% of the Fibonacci retracement zone. This is 50%, which is known as a golden golden ratio of the Fibonacci retracement zone. This 50% of Fibonacci retracement zone is a very, very vital area, right? So market is moving. So if the, so this is particular, this area is a very, very strong support area. Either market may retreat towards the upside, but if this support is broken down, that it may come to the next level, that is 38.2% of Fibonacci retracement zone. Generally there is a possibility to retrace, so it has already taken a support of 50%. If the market trades, if the Nifty trades above the 50%, then there is a possibility to go towards the upside. On that case, the first resistance would be 17,700, and the very vital and the next resistance would be 61.8%, which is also golden ratio Fibonacci retracement zone. But if this particular 50% is breached towards the downside, then the second support would be 17,250, and the first support is 17,500. Correct. This is as far as the Fibonacci retracement in this zone. So this is a very vital zone. If the because you see the candlestick, it also signifies that this is a reversal pattern, and also it has, and as far as the Fibonacci retracement zone is concerned, now it is trading above the 50%. So we can expect there is a possibility to be towards upside. If it moves towards the upside, then it may go based on this resistance and support already I have mentioned over here. And even so, if it moves toward the upside, it means that as far as Elliott is concerned, the fifth wave will also start. Right. So this is the particular as far as the technical parameters. So as far as the Elliott is concerned, if it moves towards the upside, then a fifth wave will start, then market will go towards the upside. Another plus point is that it is trading above the 50%. If this level is not been breached, then there is a possibility to go towards the upside, and this is also reversal pattern. So it depends on. So now these are the particular parameter I told you. If this thing happens, then market there is a possibility to go towards the upside. Now, as far as the volatility, now you see we have seen there's a huge volatility in the market. For the volatility to measure the degree of volatility, already I have plotted here another indicator which is called a Bollinger Band. You see there are in Bollinger Band you can see there are three bands are there. These are lower band, these are middle band, these are upper band. These are 20 simple moving average, right, and middle band, and this is the standard deviation of 20 simple moving average of upper band, and this is the standard deviation of 20 simple moving average of lower band. Whenever you see there is expansion among the bands is very high, we can, which signifies technically this is a huge volatility. You see there is a huge expansion in between among the lower band to upper band. That's why you have seen the market has nose dives very drastically, right? But with comparison to the, if we go to the other area, if you see the this area particular, see the expansion among the bands is very low. That's why we have seen here the correction, downside correction was very low from here to here around 150 points, but here from here to here around 500 points. So as far as the Bollinger Band is concerned, there is a huge volatility, right? We can also cross check that there's volatility with another parameter, which is called ATR, which is average true range. If we go to the ATR, so we have to plot the ATR. So now let me plot the ATR first, which is called an average true range. So with the ATR, we have to plot another indicator also. First, let me plot the average true range. Yes, this is average true range. Now I'm plotting the average true range. This is the average true range, right? This is the average true range. With the average true range, we have to also plot the 9 simple moving average to measure the volatility of degree of volatility. All right. So now moving, let me go to the moving average. Yes, this is the moving average. So now let me plot the moving average here. I'm just plotting the moving average. It should be 9 simple moving average. Make the color change because already red color is over here, so I am making it an blue color. Now let me just now go to the parameter. 9 simple moving average is already mentioned over here. This simple moving average, and let me plot. Yes, this is a now you see this is a 9 simple moving average. What is the value? 18,057, and here is the value is 21,000 21,000 909999. So it means the value, when the value is higher than this moving average, which indicates a strong, huge volatility. So here you see, as far as the ATR is concerned, there is a huge volatility as the value is greater than the simple moving average, right? Apart from it also, we can also get a very good information, having checked that which we call the open interest. Let me check the open interest of Nifty. So what the open interest says? Yes, this is the current open interest. You see, this is a PCR. PCR is 0.71. PCR is negative because 1 is a neutral zone, above 1 is a positive PCR, below 1 is a negative PCR. Now you see, as far as the option data is concerned, here you see these are 17,500 put. That put writing is increasing more. Put writing is more than the call writing with the strike rate of 17,500. It means institutional traders are basically considering or the put writing of 17,500, but here is 17,000. The call writing is very lower. Here you also see the 17,600 in strike rate. If you check the 17,600 strike rate, where put writing is happening more with comparison to the call writing, it means the market participants are thinking the bullish. This is a bullish indication. The, as long as the put rating will increase, the simultaneously market will also go towards the bullish side. So we can say that 17,500 would be the very strong support, and the first support would be the 17,600, and the very strong support would be the 17,500, and the call rating and resistance side is the 18,000, right? So as far as this PCR is concerned, put call ratio here is a 0.71, which is lesser than 1. That is a negative data. But you see that gradually 17,500 and 17,600 put is gradually increasing. Once it start increasing more and more, so definitely this will also turn into a positive data. So once it will turn into positive data, then the market will be bullish. So as far as the we are getting some positive sense from this particular, but still is a negative as far as the option data is concerned. But we are getting some positive sense from here that there is a possibility to be retraced towards the upside. Gradually there is a possibility to be go towards the upside. Now let me go to the again once again to the chart. This is as far as the technical parameter I explained you, right? So now if I check the another technical parameter also, we can see the what the that is so let me plot that RSI, what the RSI, relative strength index. Relative strength index, this is also a momentum indicator. A lot of investor are using particular this parameter also. What the relative strength is? Yes, relative strength index is value is what is the value of relative strength index? Value is a 46. I mean below 50 is a negative. So as far as the relative strength, the momentum indicator is also negative. But yes, but as far as the option data we have checked, but gradually call writing and put writing is happening more and more, and also the plus side is it is as far as Fibonacci retracement zone is concerned, it is trading above the 50%, and there is also one candle is there which is a which signifies that reversal pattern, and also that Iliad, if the Iliad starts from here towards the upside, then there is a possibility to go towards the upside. So as far as my prediction is concerned, based on the technical parameters, the very strong support area is 17,500. If it is breached, if it breaches, the next support will be 17,250, and if it goes towards the upside, then first resistance will be 17,700, then 17,800 second resistance. This is as far as technical parameters are concerned, right? And now if I go to the global factors, you have seen that especially in the USA, the inflation has increased so high in the 30 years. This is the first time US has I witnessed the inflation is 8%. So that's why Fed is going to take a very stringent steps. That they have already hinted that there is a possibility to increase the interest rate. That is one of the reason. So that's why the investor has got a phobia. So that's why investors are very cautious. That is the reason the lot of FI selling we have seen in the domestic markets, right? And this is as far as the global parameters are concerned, and maybe the Fed might increase the interest rate. So that is the global reason. So as far as the technical parameter I explained you, as far as the global parameter I told you, this is due to the weakness of the US market. This thing is happening, right? This is to be very honestly telling you, this is purely for my own explanation. I mean my own ideas. This is my totally, and this channel is purely for educational purpose. So if anybody would like to go for any kinds of trading, request you to please first do consult with your own respective investment advisor. After that you can take your own decision. This channel doesn't suggest for any kinds of stocks trading or any stock advisory. This is purely for educational channel. By saying this, I'm going to sign off today's program, but before that I request you to please do subscribe my channel and share this channel to your near and dear ones. Thank you very much and have a great day.